Hey everyone, and welcome back to the channel. Today we're going to be talking about how you can start day trading as a complete beginner in 2026. Now, I'm not going to sugarcoat this. Trading is one of the hardest skills you can actually learn, but if you approach it the correct way, then you can be successful. So let's start with the basics. What is day trading? Day trading is the act of buying and selling financial instruments on a daily basis. But the differences within day trading is you are getting in and out of the market rather than holding trades for weeks or months like actual investors. So with day trading, you can be in and out of trades within minutes or hours. Here's what trading is not. It is not a get rich quick scheme. If you approach it with this mindset and believe that you can turn $100 into $10,000 within 2 weeks, then you are going to fail, as you have already begun the process focused on the outcome rather than focused on the process. The real goal of trading is consistency. It's about developing a skill which allows you to predict where price will go with high probability whilst managing your risk and trading your plan with discipline. If you can do this, then the money will follow, but it takes a lot of time and a lot of patience to master these skills. So if you are ready to treat trading like a business and not a lottery ticket, let's dive in. So a lot of beginner traders actually think that you need to win every single trade to be profitable. But the truth is you can actually lose more than you win and still be profitable. How? It's all about managing your risk correctly. It's about your risk to reward ratio and your probabilities. So let's say you have a $10,000 trading account, and on this account you take 10 trades. You win 4 of these trades, but you actually lose 6. So you have lost more than you have won. So the losses equate to 6% in losses, but the wins actually equate to 8% in wins. So therefore, the result of this is you are actually gaining 2% overall on your account with a 40% win rate. So now your account balance would be $10,200, although you have actually lost more trades than you have won. So you can see how managing your risk correctly and using the correct risk to reward ratio is actually going to keep you profitable in the long run. And this is exactly why trading is a skill-based business and not gambling. In this case, you're not hoping to get lucky. You're building a real system which gives you an edge over the market over time. You are managing your risk, so when you lose, you are losing small, but when you win big. The key is consistency. You want to execute the same strategy with the same risk management over and over again, and this is going to give you a track record which is going to prove to yourself and eventually to a prop firm that you can be a profitable trader. And this brings me to the next section, the tools and the setup you need to get started. Alright, so let's talk about the tools that you actually need to start, and let's keep it simple because it is not a lot. The first tool is a trading platform. And the most popular and the best one hands down is TradingView. As you can see, I am now on TradingView, and if we just go onto the chart so you can actually get a grasp of what it is, as you can see we are now on a clean chart and we can zoom out and zoom in as much as we need. We can switch between time frames. So for example, now we're on the daily time frame, which is basically monitoring the price of this specific currency pair each day. So each candlestick will actually represent the movement of that currency pair for that day. And the same for if we used to go onto a lower time frame, for example the hourly, we would actually see the same equation where we have candlesticks being printed, but in this case now each candlestick actually represents the movement of this specific currency pair within the last hour. So for example, if we just pay attention to the most recent hourly candle which is developing, this is the most recent one which has started, as you can see at the timestamp at the bottom is at 1 p.m. and this will close at 2 p.m. and then another candlestick will develop. TradingView has many other features which you can use. For example, the indicators. There are many different technical indicators which you can use to actually help you with your trading. You can also add a favorite, so you can actually keep track of your favorite indicators to use. As you can see, I have my own list here. If you do want to screenshot this, feel free to do so. And also you obviously have all of your drawing tools on the left, so you can actually draw in your charts. For example, here I could draw in my demand zone, which price has recently reacted to. I could draw in this break of structure of this higher high being broken and mark that up as a BOS. I can add a trade position, for example here, a long position, and put it to the exact target I would like with my stop loss at the exact number I like, and that will also give me the automatic risk to reward ratio of this trade. There are also a lot of other tools you use to mark up your charts, but we don't use every single one, of course. We just use the ones which are most suitable for our strategy. And whether you're trading stocks, futures, forex, crypto, indices, TradingView has you covered. I use TradingView every day. It's simple, clean, fast and reliable. If you want to get serious about your trading, this is exactly where you need to be doing your analysis. Now, the second tool you need is an actual platform to execute your trades, and this is where most beginners make their mistake. Now, a lot of beginners think they actually need to start trading with their own money. They'll open up an account, invest $500 to $1,000 and start trying to flip it into a much larger account. But this is the problem. When you are trading your own capital, you are much more attached to it, so every single loss feels more personal and you become much more emotional, which obviously results in losses. So you're actually going to lose your own capital and you are putting your own money at risk. The pressure of it being your own capital can cause you to get way too emotional, which can cause you to revenge trade, which can then result in you blowing up your account, which is then going to actually put you off trading overall. And this is why I recommend starting off with a prop firm, and specifically Goat Funded Trader. So here how it works. As you can see, I am now on the Goat Funded Trader website. And what you can see is we actually pay a small fee where we get access to a challenge. And once we complete this challenge, for example, a one-step challenge, a 15k account, you have to make 10%, you'd have to pay a $115 fee. But once you complete this one step and make the 10%, you will then get access to a $15,000 funded account where you can keep up to 100% of the profits you make on that account. And as you can see, there are a variety of challenges and different account sizes which Goat Funded Trader offer, and you can actually scale up from $5,000 all the way up to $400,000 in capital. Let me say that again, you're trading their capital and not your own. When you make a profit, you get paid out real money straight into your bank account. And this is why the entire channel is focused on Goat Funded Trader, because it is the smartest way for you to get started. You're not risking your life savings, you're not blowing up your personal account, you're learning how to trade in a professional environment. Because it's the smartest way for you to actually get started. You're not risking your life savings, you're not blowing up your personal account, you're learning how to trade in a professional environment which is designed to keep you profitable in the long run. And the best part is, Goat Funded Trader actually offer instant funding options, so you can skip the entire evaluation process and begin trading live capital immediately. So if you're serious about day trading, here's your setup. TradingView for your charting and Goat Funded Trader for your capital. This is the right way to get started. I'll leave the link to Goat Funded Trader in the description below. Check it out, explore the different account options, and when you're ready, take the first step. Now let's talk about the number one reason why traders actually fail. You can have the best strategy in the world, but if you have poor psychology and you cannot control your own emotions, you're going to have a very difficult time in achieving profitability. And when you're trading a Goat Funded Trader account, you have rules. You will have a daily loss limit, a maximum drawdown limit, and a profit target which you will need to hit. If you do breach any of your trading rules, then you will lose the account. So it is important to always check your trading rules. So you need discipline. You need to stick to your plan. Even if you hit your daily loss limit for the day and you believe that you can make it back, you need to have the discipline to walk away and come back another day, as this is what's going to keep you profitable in the long run. And this will help you avoid overtrading, revenge trading, or getting FOMO. And here's what I tell every beginner. Treat your prop firm account like a job interview. You're not trying to get rich overnight. You're trying to prove that you can follow your rules, manage your risk, and trade your strategy with consistency. If you can do that, you'll pass the challenge, get funded, and begin getting paid. But if you do let your emotions take over, you'll blow the account and you'll be back to square one. So how do you actually build discipline? You journal every trade, review your performance, and actually identify your mistakes, and then commit to becoming 1% better every single day. Trading psychology is a skill, just like analyzing the charts. And the sooner you work on this, the faster you will become profitable. Alright, let's talk about some basic trading analysis. And I'm going to keep this simple because we do not need to overcomplicate things as a beginner. So the first thing you need to understand is market structure. And we'll start off with the uptrend, looking at the textbook example. So as you can see, when the market is in an uptrend, we have an expansion onto the upside where we create a higher high, the market then pulls back, and then we create a higher low and have another expansion onto the upside, creating another higher high, and this same process keeps repeating until the market becomes exhausted. Now, one key note is a higher low is not confirmed a higher low until it invalidates the previous higher high. So for example, this higher low here was not actually confirmed a higher low until we actually took out this higher high and created this new higher high. So again, this was just a textbook example. This is more of a real life example of what it's going to look like in the charts, as it's going to be a lot more choppier and messier, but the principles remain the same. We're just trying to identify the highest points and the lowest points in this uptrend, which will mark our higher highs and our higher lows. Now it's the same principles again for the downtrend, it's just now we're looking at an uptrend just upside down. So as you can see, when the market is in a downtrend, we have an expansion onto the downside where we create a lower low, we then pull back, create a lower high, and then have another expansion onto the downside creating a lower low, and then another pullback creating a lower high, and this process will keep repeating until the market becomes exhausted. And one key note again is a lower high is not confirmed a lower high until it invalidates the previous lower low. So for example, this lower high was not confirmed a lower high until we invalidated this previous lower low and created this new lower low here. And again, this was just a textbook example. It can look like this sometimes in the charts, but mostly you'll see more fluctuations in between price and it will look more a bit like the real life example. But the principles remain the same. You're just trying to identify the lowest point and the lowest high points within this downtrend. And when we are looking to buy the market in an uptrending market, we are looking to buy price once it's actually pulled back towards the most recent higher low, where we would then look to buy to catch the next higher low being printed and then target that next higher high as such. And it is the same for the downtrend, it's just upside down. Once a lower low is printed, we will then wait for price to pull back towards the nearest lower high, where we will then look to actually look for a sell, where we would look to catch the next lower high being printed and look to target the most recent lower low as such. And this is where the second thing which you need to understand comes into place, which is supply and demand. So as you can see, we have a demand zone being created here and a supply zone being created here. So what we can see with the demand zone is we have a large move onto the upside being made that then creates a demand zone down below, and then we will just wait for price to return back to that demand zone where we will look to buy with the willing demand at this level. And the same with supply. We have a significant move being made onto the downside which creates supply above. We will then simply wait for price to return back to this level of supply where we will then look to sell the market with them willing supply. And what we can see with the supply zone is we have a large impulsive move onto the downside which creates supply above, and then we would simply wait for price to return back to that supply where there are willing sellers at this level where we will look to sell the market. So here's a real life chart example. As you can see, I have marked up my higher highs, higher lows and higher highs. I have also marked up my most recent demand zones which have formed, and I marked up the most recent demand which was created in the market. As you can see, we have this large significant move being made onto the upside here, which created the most recent higher high, which is obviously a significant level of demand, as we can clearly see a large move being made from this area. And what's important to note about this demand zone is we actually mark up the last two candlesticks before the up move. So as you can see, I have these two bearish candles, which is a pivot in price. We see this pivot in price, and then we see a sharp move onto the upside. So these two candlesticks basically represent the last bit of supply in the market before this demand was injected into the market. So we now just wait for price to return back to this level of demand where we know there are willing buyers at, and we will look to buy. And then we also combine this with market structure, because we can clearly see the market is bullish, so therefore we are ideally interested in longs anyway, and we can actually see prices returning back towards the area where the most recent higher low was being printed, where we can assume the next higher low will be printed. So as you can see, we get tapped into the demand zone and we could buy at this level of demand. We get a strong impulsive reaction and price heads straight towards the next higher high to actually continue with this overall bullish trend to plot in a new higher high. As you can see, we get the final expansion up here where we take out the higher high and now plot in a new higher high. So as you can see, you can combine market structure with supply and demand to actually take high probability trade setup. So it's the same principles for when we are looking at a downtrend market and when we are looking to sell from supply. It's just we're looking at it upside down now. So as you can see with this market, we had recently turned bearish and we had plotted in this recent lower low, and from there I marked up the most recent supply zone which created this lower low. As you can see, I used this wick as it is a large wick. I didn't need to use the whole candlestick as my supply would be too large then, so I refine it to the wick. And as you can see, I've refined it to this wick. My supply is here, and I'm just slowly now waiting for price to return back to my level of supply where I will look to enter a trade from. So as you can see, we get tapped into that trade from that level of supply, and from there we get a strong impulsive move onto the downside where the market targets the most recent lower low to create a new lower low and continue with this overall trend. So as you can see, I've actually caught the most recent lower high being printed in the market here, as this lower high actually invalidated the most recent lower low down below, which confirmed this was our new lower high. So your job as a trader is to actually identify what the market is currently doing and then adapt to that. For example, if the market is making a series of higher highs and higher lows, you'll know that it will be in an uptrend, and therefore you should be looking for demand zones to buy from. And it's the same process for a downtrend. And when the market is in a downtrend and you can see it making a series of lower lows, lower highs and lower lows, you then want to be looking for supply zones to actually sell from to adapt to that current trending market. And that's it. That's the foundation. You don't need 100 indicators. You just need to be able to understand market structure and combine that with supply and demand to actually build high probability trade ideas. Now let's talk about building a trading plan, because if you don't have a plan in place, then you are not trading, you are gambling. And here's exactly what your plan should include. Risk per trade. Most prop firm traders should be only risking 0.5 to 1% of their account balance per trade. Daily loss limit. What is the maximum you are comfortable with losing in a day? Goat Funded Trader will set you a daily drawdown limit, but I do recommend setting your own one which is a bit lower so you are actually keeping yourself safe. Trading sessions. You need to be able to understand where your best trades come from, whether that's the London session, the New York session. Pick one and stick with it. And finally, rules for stopping. When do you walk away? Once you are near your daily loss limit, when you have lost a certain amount of trades, you need to define it. Your trading plan is what keeps you disciplined. It's what keeps you from overtrading, revenge trading, and stopping you from blowing your account. Write it down, review it every day, and make sure you stick to it like your paycheck depends on it, because it actually does. And now let's talk about strategy. And one thing I will tell you is that you need to master one strategy. And a lot of beginners make the mistake of strategy hopping. They watch a YouTube video, take a trade, lose that trade, and then go on to the next video and learn a whole new strategy. And this is a recipe for failure. So you need to pick one strategy, learn it inside out, and practice it daily until it becomes second nature. Whether it's breakouts, supply and demand, ICT, it doesn't matter what it is. What matters is that you commit to it. And here's how you do it. Gather as much data as you possibly can by using replay mode on TradingView so you can actually implement the strategy into your brain and program it into your subconscious mind. And then you want to forward test it and actually trade it on a live account to see if it actually works in the live market conditions, so you can gain live experience trading your strategy, which is also going to help you develop and grow as a trader. And then you want to forward test it. You want to trade it on a prop firm account so you can gather real life experience trading your strategy, which is only going to help you develop further as a trader. And finally, journal it. Write down what works and what doesn't work, review it, and identify your strengths and weaknesses, which is also going to help you grow and develop as a trader. Repetition is how you build skill, repetition is how you build confidence, and repetition is how you become profitable. Don't chase the next shiny strategy. Pick one, master it, and let the results speak for themselves. Alright, let's talk about scaling up, because once you have proven you can trade consistently, the next step is actually learning how to grow your capital. And this is really where Goat Funded Trader shine. As you can see, you can start off small by purchasing a smaller account, for example a 5k account for just $17. And once you've actually passed this and became funded and got a payout, you can then use that payout to actually scale up and invest into a larger account. And you can keep repeating this process over and over again until you're up to 6 figures in funding with Goat Funded Trader. So the goal would be to start off small, trade something you are comfortable with, and then work your way up onto them 50k, 100k, all the way up to 400k in funding with GFT. And here's the best bit. You're trading with their capital, not your own. So as you scale up, the potential of your earnings will increase, but your risk will stay the same. And with Goat Funded Trader, you can do this without ever risking your own personal capital. You can go from a complete beginner to a funded trader, all while learning and growing in a professional trading environment. So if you're serious about starting your long-term trading career, start with Goat Funded Trader. Prove your skills and scale up. Alright, so we've covered a lot in this video. We spoke about what actually trading is, the overall goal of trading, how to build a plan, trading psychology, scaling up, basic analysis, and much more. If you've made it this far, you're serious about trading, and this is the exact mindset you need to succeed. So here's what I want you to do next. If you're ready to start trading the right way, without risking your own capital, without blowing a personal account, then make sure to check out the link in the description where you can see all of Goat Funded Trader's plans. This link will take you directly to Goat Funded Traders' official website where you can explore their instant funding plans, their other challenge plans, and actually begin trading real life capital today. So whether you're a complete beginner or you've been trading a while, Goat Funded Trader will give you the opportunity to trade professionally, get paid without ever actually risking your own capital. So click the link, check it out, and take the first step to becoming a funded trader. If you found this video helpful, be sure to like, subscribe, and drop a comment below. Let me know where you are at in your trading journey. I'll be reading every comment and I'll be here to help. Thanks for watching everyone. I'll see you in the next one.